It'll be a big week for stocks with 100 companies in the S&P 500 reporting financial results as we approach the halfway point for earnings season. Here to help us navigate the trading week is Kevin Kelly, Chief Investment Officer of Recon Capital Partners, and he joins us on set. And Kevin, of course, the strong dollar has resulted in some pretty lackluster earnings from a variety of companies. But going forward, how do you see the strong dollar impacting stocks and the rest of earnings season?
You're making great points. So if you've seen what's happened in earnings results already, it's impacted several giants that are all across the world. So if you look at eBay, they were significantly impacted, Microsoft as well. Amazon was impacted to the tune of about $1 billion, and their sales only increased 3% internationally. So that's a big number for them. So the euro has actually decreased 20% since last May, but the bulk of that wasn't impacted into the last fourth quarter results that have been released by the company. So what we're going to have to see is how it's going to impact the Q1 and Q2 earnings as well, because it has come down since companies did close their books for the end of the year.
And for investors, how do you navigate this type of environment? I mean, even after earnings season, do you see the strong dollar being a headwind for stocks even then?
Yeah, so the strong dollar is anticipated to be a big headwind. And one of the reasons why is that America is growing, right? So if you see in the U.S., we're still printing great GDP numbers, albeit lower than anticipated. So a thing you need to look at is to see, is China slowing down? Is the U.S. slowing down? Will that impact sales? And I think that'll actually have a bigger impact as well on top of the stronger dollar than just the stronger dollar as a theme for the rest of the year.
And going forward, what sectors are you seeing opportunities in? Do you see any upside in, say, financials with the looming rate hike from the Fed, or maybe consumer discretionary? We're seeing, of course, gas prices reach lows, and potentially consumers may start to spend that money at some point soon.
So the U.S. market is actually pretty fairly priced right now, around 16 to 17 times earnings. Everybody's anticipating the S&P making around $120. And right now we're not seeing that growth just from the numbers we're seeing. So we want to avoid sectors like utilities, consumer discretionary. Staples have been bid up. One way you want to look into things is probably tech, right? So tech has been hit. Those companies are still growing. Healthcare is still growing. Names in the tech sector that we like are Akamai, AKAM. They're a content delivery network, so they actually help deliver all the content across every reach on the internet. So Facebook, you've got Netflix, so they help deliver that, so they're a great name to look at.
All right, Kevin Kelly, Chief Investment Officer at Recon Capital Partners. Thanks for coming in.
Thanks for having me.
I'm Scott Gamm, and you're watching The Street.